India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a big day. It's a big week, and I think we all know why. Exit poll results over the weekend mean that we're going to start, according to the GIFT Nifty, with a 3% pop. We're coming to you live from the CNBC-TV18 Muthoot Oswal studios. I'm Prashant. With me, my colleague Surabhi here, and Nigel is joining in from the Bank of America conference. Guys, good morning.
Good morning, everyone. Hi. Nigel, what's the mood out there?
I don't think that could be a... should be yet to get to the mood out here, but obviously, we're bracing for one of the biggest days. Cues over the weekend have been good, whether it was the US markets, whether it was the exit polls, and the OPEC as well pretty well behaved. So it's going to be a big day. Let's kickstart with the action right away, Prashant.
Absolutely, and it's one of those days which I think we will remember, right? And we will talk about maybe 3 years, 4 years, 5 years later as well, and say, well, this is what happened after the 2024 elections, at least after the exit poll results. So let's just sort of, begin by telling you what you need to know. And I'm going to, we'll talk about the GDP numbers, which I think add a little bit of icing to the top, or we'll talk about other things, other factors as well. But I think I'll just focus exclusively on what is the big story, which is, of course, elections, right? So get ready for a big rally. I think that's pretty clear. And you got the GIFT Nifty, as I said, indicating a 650 odd point higher start. Exit polls predicting a decisive, that's the GIFT Nifty for you, 800 points now. On Saturday night, while the exit polls were on, I was thinking, well, new all-time highs, and then we'll sort of pick up from there. But this is, of course, going to be a meaningfully higher high as far as the sort of Nifty is concerned. So exit polls predicting a decisive victory for the BJP. That is point number one. BJP, according to these exit polls, poised to win 325 seats. NDA poised to win 360 to 400 seats, which means that both these tallies are significant improvements over what they did in 2019. And this is incredible. For the third term, the BJP and PM Modi looking to better, perhaps, when the results come out, the best ever tally in terms of the general elections. This is a significant positive surprise relative to market expectations. This is important, because, the Satta Bazaar in that sense was at about 305 for the BJP. The last we checked was Thursday evening, Friday morning. So in that sense, it's not a surprise that the BJP is coming, but I think the extent of the victory perhaps is a surprise. Having said that, talking about what the Satta Bazaar, etc. were talking about already, I think there was some skepticism. People were waiting, people were holding back, thinking, let the results actually come through, and then we will try and go in. So Nifty perhaps makes a new all-time high in all likelihood. The earlier one was 23,110. Expect a serious short covering from FIIs. They went short even more. From last week, Tuesday, when they were long 47,000 contracts, they ended last week, which is Friday, with 3.2 lakh net contracts short on the index future. So a lot of this will cover. Now, actual results are, of course, tomorrow, and we will see what happens there. But I would say that, the immediate election pop, about 70-80% of it may actually come through today itself. And then we will, of course, see the extent of the divergence in exit polls relative to what the actual, what the exit polls we know as of now. Remember, both in 2019 and 2014, and actually in 2009 as well, last three general elections, exit polls got the direction right, but they underestimated the scale of the victory. So it's actually entirely possible that going by that sort of historical data, the actual numbers are even better for the BJP and for the NDA. Okay, so, as I said, broad move, broad rally. Expect sharp moves in public sector stocks. If you're looking at what to do, I think you basically should remember that what has done well so far, which is essentially all of it, which has been doing well because of the tailwind of government support, government expenditure, which is, of course, PSUs rank really up on the top. Adani Group stocks, which are politically sensitive, they had a rally going into this. But of course, I think they are set for a bit of a re-rating. And of course, few financials as well. So, this is broadly the bunch. And of course, manufacturing, PLI. I mean, essentially look for stuff which is already done well, where there is confidence that there is political continuity. So there will be sort of rich dividends in that sense. A dollar INR spot should move sharply higher. I think it should go up to about 83 to 83.2. But beyond that, perhaps I don't think we are expecting a move, because, I mean, the RBI will not want very sharp sort of rate volatility to start to seep through. This would, I mean, just to sort of wrap this up, just the scale of it is quite important, because this is the first time since 1962 that a sitting Prime Minister gets re-elected for a third term. As I said, expect a significant policy continuity dividend. A mandate of this size, and we'll talk more about this over the next couple of weeks, etc. A mandate of this size makes most economic elements of the BJP's election manifesto doable in a very imminent, immediate kind of fashion. So I think this is where this is the slightly longer term, beyond here and now, beyond what happens today, and of course tomorrow as well. Surabhi.
Prashant, I say that the markets today are going to get a 5 ka punch. And I'll tell you why the 5 ka punch. The first big punch, obviously, is the exit poll result.
Yeah.
Second, third, and fourth are very strong data prints from India, from the US in terms of core PCE, and from China this morning.
Yeah.
So those are the 3 data points. And the fifth part of that punch is the short covering that we're all talking about, plus the cash market buying that started. Now, first of all, the global cues are very, very positive. We had Wall Street doing really well, the Dow and the S&P. The Nasdaq was, a little iffy. But more importantly, yields also cooled off once that PCE number came in, because that inflation number for the US is more or less on track. The core numbers were bang in line with the estimates for April, 0.2%. So what that did was it cooled off the yields as well. The last I checked, the US 10-year, even right now on our screens, it's still below the 4.5% handle. Remember, earlier in the week, last week, we were talking about 4.6 back on the screen, but that's changed now, back to sub 4.5%. So that's good news. In terms of other global data points that are important to look at, the Caixin numbers that have come out of China. Pull up the Hang Seng Index. Before we talk about the India GDP, just to complete the global picture, pull up the Hang Seng. It's shooting away the mainland Chinese market as well as the Hong Kong markets because of the Caixin manufacturing print that's come in, which is at a 2-year high, which is above the estimates, which is, of course, better than the previous print. So that manufacturing PMI, the private sector survey, is looking very good. So global markets are giving you a further edge up across Asia as well, not just Wall Street. Now come to our GDP print, which was blowing past expectations as well. Whether you're looking at Q4, whether you're looking at FY24, those numbers were just fantastic. 7.8% was the actual. Our own poll was at 6.7%. Of course, it's a decisive sort of improvement over the same period last year. Come to FY24 numbers. You've got 8.2% on the screen. Anything above 8% anyway, optically, sentimentally looks extremely good. The FY24 number as well. There we go, 8.2%. So GDP numbers looking absolutely phenomenal. Now coming to the, fund activity. On Friday itself, there was some cash market buying happening at the FII desk. So about 1,600 crores. DIIs have anyway been buyers. And that's the big, big question. Whether we will start to see more big numbers now on that FPI part of the screen, Nigel. But as I call it, it's a 5 ka punch this Monday morning.
Well, I like the way you put it, Surabhi. And since there's a lot of talk on the FI positioning, let's run you through not just the index futures, how they positioned on stock futures as well as the cash market. So first up, getting into the event, they added shots yet again, and that's something that they have been doing. So they added close to 3 shots for every 1 long position. 30,000 short contracts were added. And that's why the long positioning is holding at around that 14% odd. Now, how did the participants position for this event on index futures itself? So the FIs, yes, we've been talking about them being net short on the index, right? But take a look at the clients. That's large HNIs, retail audience here as well. They have normally got it right. And they are, combating this FI net short position with almost an equivalent amount of net long positioning. So that's just one point on the table. How the clients position though, both on the index as well as on stock futures, the long positioning is the highest we have seen in multiple months. So they have gone into this event net long on the markets. But coming back to the FI positioning then, yes, they're net short on index futures. And we've been making this point for quite a bit. But if you take a look at what they've done on stock futures, actually the net long positions are the highest we have seen in multiple months. So they've actually added longs on stock futures, telling you there's a bit of a hedge that's playing out here. On the index futures, yes, we'll see a bit of a short covering bounce that will play out, but it appears on select stocks as well, there is some long positioning that's added. And the key point that I'm going to be tracking from here on is the cash market selling. You know, in 2014, 2019, getting into the election verdict, if you take a look at the flows between January to May, you'll see that the FIs actually were buyers. Yes, plenty has changed, but this time around, getting into the event, actually the FIs are sellers. So it could be a global phenomena. Yes, it could be with regard to the emerging market outflows as well. But this big FI net sell number, if that could turn around, if they were waiting to get this event out of the way, then, you know, that's what's going to propel this market higher. So the short positioning that the FIs have on index futures and the turnaround in terms of selling to buying, that's what's going to help the Nifty move up. So I'm going to track this data point very, very closely. On the levels that we're tracking, well, as you all mentioned, the fresh all-time highs is around 23,111 approximately. So we'll have to keep an eye out on that mark. And the 20 and the 50 DMA, they've been crucial support zones. So around 22,400, that's a line in the sand on the downside. The Nifty bank, that has to get to 50,000 odd. And since the FIs, if they're going to be looking to come back, a lot of large private sector banks out there could find some favor. So the Nifty bank actually will be the one that will propel the Nifty higher from here on. I don't know whether risk reward works on the Nifty, 800 points higher in today's trading session, but the Nifty bank is the one to track. If that can hold on to 50,000 odd, that's going to be the big one. And as I mentioned earlier, the FI buying in the cash market has to return. If that's the case, you know, then we're going to see some big support coming in from them. Back to you guys in the studio.
All right, Nigel, thanks very much. Coming back to you in just a bit. So let's kick it off. We've got lots of calls coming in on equities. Mahesh Nandurkar of Jefferies says that exit polls indicate 305 to 350 seats for the BJP and another 50 to 65 seats for the partners, comfortably above the simple majority mark of 272. He says while a repeat win for Prime Minister Modi was a consensus, these numbers are higher than expectations. He says if the actual results on June 4 mirror this, it would be a sentiment positive, especially for capex stocks. However, given the already strong domestic positioning, small and mid caps could take a near-term breather after the election rally.
Okay, well, Venugopal Garre of Bernstein says that we called for investing into election results as we anticipated a continuity of power. He says, given that the exit poll trends translate into results on Tuesday, a continuation of the relief rally can happen with the market touching 23,500 briefly before profit booking takes over. He adds a greater margin of victory with seats going into the 380 to 390 or above. Range can increase the magnitude but not the duration of this move.
Let's get you some money market views as well. B. Prasanna of ICICI Bank says the outcome of general elections will dominate both sentiment and flows in the currency market in the coming week. He says if the final outcome is consistent with exit poll results, which is their base case, they're expecting the rupee to appreciate to 82.75 to the dollar, with a range of 82.75 to 83.25 in the coming week. However, he says in case of a negative surprise in the electoral outcome, the rupee will be under sharp depreciation pressure. He expects the RBI to prevent sharp moves on either side.
On bonds, we've got B. Prasanna who says that US yields soften owing to inline economic data and positive demand-supply scenario. He says local yields, however, remain range-bound going into general election results and the RBI policy due this week. He adds S&P's revision of India's outlook to positive and declining oil prices had limited impact given risk adjustment ahead of key events. He says with exit polls predicting return of incumbent government with higher majority and expectations of fiscal prudence to continue, he expects markets to trade with a positive bias and the 10-year benchmark bond yield to trade between 6.9 to 7%.
Okay, all right, so those are some views coming in both on the equity as well as the money markets. Well, let's kick it off with our first guest on Bazaar this morning, Matt Orton, U.S. market strategist and chief market strategist at Raymond James Investment is with us. We also have, I think, Arvind Sanger now joining in, managing partner at Geosphere Capital Management. Gentlemen, great to have you. Matt is here with us in the studios. Arvind joins us all the way from the U.S. on the phone line. Matt, let me open with you. So we're gearing up for what could be an absolute bazooka of a Monday, given those exit poll results. But what do you make of market positioning? Because this is a market which is already at all-time highs.
Good morning. It's great to be here finally in person and meet everyone. And it's an exciting time to be here because the results are clearly showing that there's going to be policy continuity. I think that's what the market may have been reacting to with some of the volatility over the past few weeks. So getting that clarity moving forward, I think, is very important. And in particular, you're seeing a lot of the CapEx-related names, a lot of the infrastructure-related names making particularly large moves pre-market. And I think that's where I'm most optimistic about India right now is on the infrastructure play. We've talked about that in the past, but I think it signals that there's a lot of opportunity moving ahead in that part of the market.
So just quickly, do you want to expand on that? Because you've liked some of these stocks in the past as well. And given the kind of cues that we have, which sectors or maybe one or two stock names, if you could share, where you really think the pop could be most felt?
Yeah, absolutely. I think in particular, when you look at the bounce and the moves that you're seeing in infrastructure, particularly related to road and rail, I think that's important. When you look at the companies that generally support power build-out, so Adani Power, Tata Power, I think all of that makes a lot of sense to look into. Larsen & Toubro is probably my favorite name in the space because of its broad exposure to the infrastructure theme. And even a name we've talked about a lot, which is in autos, Mahindra & Mahindra, they're not just exposed to the consumer and a lot of new product launches, but the Mahindra group in totality has a lot of exposure to the India growth theme.
Will
L&T and M&M.
Will FIs come back and I mean, they've been sellers, Matt. So that's a big sort of variable because locals are all buying. They've been pouring money into the market, but FIs have sat out and even sold. So will that turn, you think, or not really? What's your sense?
You know, Prashant, I think it will change. Heading into elections, a lot of people are always jittery on that front. But moving forward, we have clarity. And India, when you look at India relative to other global markets, outside of the US, India is the only consistent compounder over the long term. It outperforms almost every other market outside of the S&P 500, and that's a reason to own it. And when you look at the massive growth trajectory, positive demographics, and the fact that China is now encountering or really being reminded of the challenges that they have going forward, I think you'll see a rotation out of China, the fast money moving out of China and coming back to India. And I think that can be stickier now that we're through this event.
Okay. Arvind Sanger is also with us. Arvind, good morning from India. Great to have you with us here. Thanks very much for your time. So let's talk here and now. People who are watching this want to know, what should I buy? What should I buy this morning? You know, if it's going to be a broad-based move. Yesterday we had Ramdevji with us. He was saying that there is, Monday is going to be no time for analysis because it's all going to be, big rocket moves. Maybe that is true, but...
Well, I think the small and mid caps are certainly going to do well. They've been, rocket ships already, but I think risk on is on in full scale, and people either some of the FIs had sold down a little bit in advance of this, and investors had also shifted a little bit of money into large caps just to have a little bit lower risk profile. I think what you'll see is risk-seeking behavior more going up, and I think that's going to help. But as your previous speaker was saying, I think many of the things that have worked, and I would add to that, the financial sector is one that has been somewhat tepid. And I think if we are playing a medium to long-term theme on India growth, then the banks and the NBFCs, where RBI has been cautious, and I think it's a good thing that they've been cautious, but the reality is that you cannot have an India Inc. growth story without the financial sector also participating in the rally. So in addition to a number of the other sectors, I think financials will also benefit.
Okay, all right, got that point, Arvind. And Matt, good to see you in the studio. I'll be looking forward to meeting up with you at the conference later today. But Matt, what is your view on the financials? Some of those large private sector names, they've actually virtually done nothing in the last 3 years or so. If you look at, Kotak Mahindra Bank, HDFC Bank, banks with very, very good pedigree. But in terms of performance, they've been lacking. Your view?
Yeah, great to see you, Nigel. I'll see you in a couple of hours. And like Arvind was saying, financials do offer opportunity going forward. My favorite pick in this space is ICICI Bank. And I think their exposure, broadly speaking, to the infrastructure theme, they're well capitalized. They're going to be able to provide financing for increasing public-private partnerships. But what's also interesting about them playing on this India growth theme is the idea that they already have 150 billion or so private banking segment, and that's poised to grow going forward because of leadership and technology. So I really like them for growth, not only to supply infrastructure growth, but also growing to an increasing middle class in India and increasing wealth in the country.
Arvind, hi, morning. So the question on my mind really is whether this is going to be a 1 or 2 day event where you react to news and there's a pop and there's lots of excitement, or whether the magnitude of the win, if it turns out to be similar to what the polls are saying right now, if we are getting a number closer to the 400 mark, whether the magnitude of the win has a bearing on the market, whether it starts a fresh leg up above 23,000. So is it a here and now reaction and then we move on? Or is it going to start something new?
I don't know that the magnitude of the win by itself is, in my opinion at least, a huge factor. Whether the NDA gets, just to take the extremes, 350 or 400 or even 325, I think it's nice, but I don't think it's critical. I think the main important is continuity, and then does a larger majority mean more bold economic actions? And that's something that will only happen if we get statements from Prime Minister Modi saying that a larger majority emboldens him to do something more dramatic on the economic front. So that's, I think that will determine, and I'm not sure where that'll go, but, we're bullish on India medium and long term. And so, beyond this 1 or 2 day pop, there's a long story ahead. But I think if we got any bold new actions by the government that are unexpected or not in the current cards, that would be a positive. On the other hand, let's be honest, there's been some talk about increasing capital gains taxes. So let's keep in mind that there are things that could come out of a budget that could be negative. So who knows where all of that will go. But I think the magnitude of the win by itself doesn't dramatically change the picture. It's what they do with it and what they indicate they're going to do with it.
No, point taken. Arvind, 1 or 2 names which you think are poised to do, what you can leave us with that viewers could, beyond today, buy something today when maybe this week, I think we're going to be up 1,000 points on the Nifty, maybe more. Yeah. Well, let's see. This morning, the GIFT Nifty is indicating a 700-point up move, but yeah, names.
Well, I would say the metals names, whether it's an Hindalco or Vedanta or some of the steel names, I think the steel infrastructure story is going to benefit. So I think we like the metal sector. We like some of the names, as I said, in the banks, whether it's an HDFC or a Kotak or an ICICI. I think those names, again, are a great growth story. So those would be some of the things I would highlight. And then, mid caps, it's more niche specialty companies that we like. So, I don't want to pick names out of a hat, but I think the power sector, you could pick any of the companies that are, in the power financing business. Those could be big winners. I think power financing is going to be acquired in a big way, and that could be another big winner sector.
Okay. All right. We'll leave it there, gentlemen. Arvind, great to have you with us here. Thanks very much for your time. Matt, great to speak with you.
Great to be here. Thank you.
Hope we can do this more often. Thank you
yes.
For joining us. Well, we'll take a quick commercial break, the first on the program today, but there is so much to discuss. We'll sort of focus on individual stocks with news, right? And our research team will help you with what is expected to react based on earnings or otherwise, news flow between last Friday and this morning. Stay with us.
Welcome back. So we are gearing up for Mega Monday, and the cues have been very, very positive. Global cues very benign, and of course we're looking at the all-important exit poll outcome as well. Let's now talk about a couple of stocks, individual stocks that will be in focus because of weekend news flow. Starting off with auto sales, lots of numbers have trickled in. Sudarshan is tracking them for us. Sudarshan, morning. How do they look?
So morning, Subhi. So before I go to specific companies, let me talk about the overall trend. So for the month of May, the trend was mixed. Overall sales in the month of May have moderated after strong sales that we had seen in the month of April. Passenger vehicle sales have seen a moderation, while commercial vehicles and tractors have seen an improvement. Even two-wheeler sales have seen a slight moderation. Now coming to company specific, starting with Maruti, sales have missed estimates and are lower year-on-year. Total sales are down 2% year-on-year at 1.74 lakh units, and domestic sales were higher while exports have dipped. Domestic sales are up 4% and exports have dropped 34%. Now coming to M&M, it's a mixed trend. Passenger vehicles have come in below estimates while tractor has outperformed. Total auto sales were up 17% year-on-year, while total tractor sales were up 9%. And company says forecast of above normal monsoon has improved sentiment and land preparation activities for Kharif crops to boost tractor demand. Tata Motors, I'm going with red as total sales were 2% higher but have missed estimates by 6%. Electric vehicle sales have dropped 4%, while passenger vehicle and commercial vehicle sales were up 2% each. Ashok Leyland, total sales have risen 12% year-on-year, and it was 1% higher than estimates. Both MNHCV and LCV sales were up 12% each as well. Escorts, I'm going with green just because of healthy outlook. Total sales were down 6% year-on-year, but company says it sees an improvement in demand post-southwest monsoon. Hero MotoCorp, I'm going with red as sales have come in below estimates and are lower year-on-year. Total sales were below 4% estimate and are down 4% year-on-year. Total sales were at 4.98 lakh units versus 5.20 lakh units in the same month last year. Company says it's focusing on the premiumization of its product portfolio. TVS Motor sales were slightly below estimate as three-wheelers were a drag. Total sales were up 12% but are down 4% versus estimate at 3.7 lakh units. Two-wheeler sales were up 13%, while three-wheeler sales have slipped 9%. Last is Eicher Motors. Royal Enfield sales have slipped 8% year-on-year and have missed estimates by 7%. It has come in at 71,000 units versus 77,000 units in the same month last year. But commercial vehicle sales have seen an improvement and were up 10% year-on-year. So total overall sales for the month of May were mixed. Some segments have seen an improvement, while other segments have seen a moderation.
So thanks very much for that. And we'll sort of discuss each of these with our guests in a bit from now. But that's the lowdown on the auto sales numbers. But more stocks with news flow. Vamakshi is here with that list. Vamakshi, morning.
Well, good morning, Prashant. Let me first start off with Coal India. They've got an update for the month of May, and in fact, coal production at 64.4 million tons is seeing an uptick of almost 7.5% YOY. The offtake too has seen an improvement of almost 7.2% on a year-on-year basis. NMDC, on the other hand, has reported a dip of almost 37% in its total production, while the total sales are down nearly 22%. MOIL is the next counter we will be focusing on. Manganese ore prices have been hiked for the second time, and depending on the grade, prices have been hiked by 30 or 35% with effect from June 1st. Aurobindo Pharma, Thera Nim Biologics, which is a wholly owned subsidiary, and Merck Sharp and Dome, that is MSD, have signed a master service agreement with effect from May 31st. This is for expansion of the biologics manufacturing facilities of Theranim. They will be investing nearly 1,000 crores for establishing the manufacturing facility. Additionally, they will also be exploring the possibilities to enter into contract manufacturing operations or CMO for biologics. Apart from that, Adani Ports also in focus. Adani International Ports Holdings Private Limited has signed a concession agreement with Tanzania Ports Authorities. They will be operating as well as managing Container Terminal 2 at Dar es Salaam Port in Tanzania. Additionally, East Africa Gateway Limited, which is a JV entity, has entered into an SPA, that is a share purchase agreement, on May 31st. They will be acquiring nearly 95% stake in Tanzania International Terminal Services from Hutchison Port, and this is for an amount of almost $39.5 million. Canara Bank will be the last one we will be focusing on. The bank will be diluting nearly 14.5% stake in its arm Canara HSBC Life Insurance Company via an IPO.
Okay, all right, Vamakshi, thanks a lot for that. Well, we've done with quite a few stocks in the equity markets. But let's turn our attention to the commodity space. Manisha Gupta joins us to tell us what's going on there. Morning, Manisha.
Morning, Nigel, and thank you for that. Well, the street clearly, reacting to the China PMI data, which is expanded at the fastest pace in 2 years. The South Korea manufacturing activity has expanded at the highest in 3 years, and that is what has given support to many of these commodities, which did not end the month of May on a very strong note. I'll start with crude oil prices because after declining 7% in the previous month, we've started June on a firm note. The markets also are reacting to the OPEC and allies extending their voluntary cuts way into 2024 and even in 2025, and that has been supportive. For the metal prices as well, this has started as a good month now. We're looking at copper prices trading almost a percentage high in Asia right now. Same is the case with steel, that's trading in the positive, and iron ore prices, aluminum, all of the metals actually in Asia are trading in positive.
All right, Manisha, thanks very much for that. Bit of a turnaround once again in copper prices, and copper had seen a bit of a profit booking over the last fortnight or so. Manisha, thanks very much for that. for now. Well, the other big story, of course, is India's GDP growth numbers for FY24, which came in way above expectations. It clocked 8.2% versus the CNBC-TV18 poll of 7.8%. The Q4 tally at 7.8 was also above the CNBC-TV18 and other poll figures. Lata is here with details on this one. Lata, over to you.
Oh, well, absolutely mind-blowing numbers from the economy. It's not just that it's above estimates. The numbers are like, 50 to 70 basis points higher than what the market was expecting. So great going in terms of the number. I just want to tell you what did well. Manufacturing was the best performer, 9.9% versus minus 2.2 year ago. Mining did well, 7.1. Financial, among the services sector, it was finance which did very well, an 8.4 over and above a 9.1 last year. Coming to the demand side, investment did better than consumption. Investment growth is 9%, that's capex, over and above a 6.6% last year. What didn't do well? Employment-heavy sectors have not done well. For instance, agriculture, up only 1.4 versus a 4.7 last year. In the services sector, it's trade, hotels, transport, communication, your ST bus, Udupi hotels, that category, that grew only 6.4%. Compared to the overall economy, it's slower. And like I told you, investment was good, but consumption has been bad. It's growing, or rather slow. It's only 4%. That could be a bit of a worry. An overall comment on the GDP number is that this 8.2 is a bit of an overstatement. We must perhaps latch on to the GVA, gross value added number of 7.2. Gross value added is what exactly the statistical organization computes. To it, you add taxes and subtract subsidies. This time, the subsidies was very low because the food subsidies rolled off, fertilizer prices fell, chemical prices fell. So, that kind of distorts the GDP number and gives it an unusual high. But even 7.2 is a damn good number. The positive is that this has come with fiscal deficit falling. Last year, the final numbers came out on May 31st. The fiscal deficit has fallen to 5.6% from the previous year 6.4, which is 1 trillion rupees less was pumped in by the government. Such good growth, despite the stimulus going away, is excellent. The worry is that consumption is not doing well. So, will the capex cycle continue if consumption doesn't pick up, if jobs don't pick up? That could be a worry. For that cycle to continue, you need other sectors to grow. Not many people have increased their forecast for FY25. For instance, Kotak Bank is done by about 30 basis and Goldman by about 20 basis points. The others, SBI is at 7.5 already a high number. So he said he doesn't see the need to increase it further. The others are also waiting by, large base and therefore, possible global slowdown. So some of the others have not increased their forecasts. Very clear that the GDP number is going to be a boost for the manufacturing and construction stocks. Very similar to what the exit poll, positives are. The GDP is backing the same stocks.
Absolutely. And that 8% number, for what it's worth, sentimentally, the market just loves the sight and sound of that. Thank you very much, Lata, for giving us the internals on those big GDP numbers for Q4 as well as FY24. We do have to take a quick break on that note. Come back on the other side and then we will have more big market voices for you, more opinion on what to do on Mega Monday. Samir Arora, founder and fund manager at Helios Capital, is going to be with us in just the next couple of minutes.
Okay, welcome back. 20 minutes to go for the pre-open session, as we've been saying. I don't think we need to say it, but it's going to be a big day. New highs, of course, 800 plus points on the GIFT Nifty. We're starting at record highs. Now, what to do after that is the question, right? So why not ask Samir Arora, founder and fund manager at Helios Capital. He's joining us right now on the program. Samir, good to have you with us here. Appreciate it. Looking dapper. You're on the political yatra, Samir, and we spoke about that the last time you were on, right? And you were kind of giving us a sense that at least, there's ample confidence with people that you met, etc. And I don't know, these kind of numbers, this is historic, Samir, right? I mean, third term with these numbers is incredible.
But you heard it from me first, which is that actually beyond a point, who cares whether it's 340 or 360, as long as it is more than 272. Let's say that last night, the number had come for BJP at 290. How much do you think the market would have been up today? maybe 2%. So
Yeah.
now it's say 3.5%. So that is worth 1%. From tomorrow, that would not matter. Of course, assuming that these numbers are similar to the final numbers. So the real bet was whether they are coming back or not on their own majority and maybe 10 extra seats. And that was enough of a bet to be as bullish as you can be. So therefore, this is clearly the fault of the FIs and all to start getting nervous 1 day before, 2 days before, as if they found something. I tweeted on this that it was the market which people were seeing and then concluding that there is something wrong, and then sort of that spiral was going on that, oh, there is something wrong, and then therefore the market was weak. Although at the end of the day, last month also the market was not down. It was like zero-ish. So it's okay.
So, Samir, so you get this exuberant kind of a start, right? Then tomorrow you got actual results, and let's say the actual results are similar or even better, slightly better. So
no, I'm saying don't think like that. Think that if they are worse, but you are still at 300, let's say. You can't be 270.
Right.
I think it won't matter beyond maybe plus minus 0.5%. Because the market's main interest was that the same management is there, that sort of the same policies are there, the same trust is there. Most of the ministers are the same, the railway minister, this minister, the oil and gas minister. So beyond a point, this over-analyzing stock market return with exact number of seats is...
No, I completely take. I was not actually coming to how much more if that number moves to 400. That was not my question. My question was what to do, what should one do now? Which are the two points? One is, does the base of the market move higher? And then, as you were saying, from here now to the budget, you can't make a bearish argument in that sense, right? And how are you bearish, right? Why are you bearish? So that is one. Yeah, there's the base move higher, and then what should one do? What has done well, continue to do well? PSUs, defense, manufacturing, railway, power. Is that the list to focus on? Go on.
So that, first of all, the base definitely goes higher. And the reason for that is that the FII also has less reasons to be negative. And this year, they have sold about $2.5–3 billion year to date, which I think at the end of the year will be positive. But more than that, if they were using this, see, the thing is, at the end of the day, everybody knows what is happening. It is that the investor is basically worried about his sunk cost. He has too much money invested in China. He has ignored India in the past. Now you have to prove to him beyond a point. One university endowment guys came to us and said, okay, I need to write a note for the board. And one of the points was, can you send some evidence to show that the elections are fair? This not now, we were asked about 20 days ago that, I need this bullet point. Can you give me some material? So absolute nonsensical stuff. I hope he's not listening. But the point is that these issues will come down. And in general, India was doing well without this also. The market was up, if I look at NSE 500, is up some 8% already this year. So not bad in itself. So the base definitely goes higher. In terms of immediate, which means today, tomorrow, obviously, the same stocks do well again. And thank God I have to make some of these now, these PSUs. But I think beyond that, my favorite sector comes back, which is the financial sector. Because if FIIs come in, what is easier for them to buy? Financials are related to the economy. They are not like IT or pharma or consumer, even a little bit, which is more on their own kind of thing and not dependent on government policies and reforms and those kind of things. So these are domestic, cyclicals, economically sensitive. All that also includes financials. And it is easier for them to justify it because you can clearly show that last 2 years they've underperformed, at least as in aggregate. So I think the financial will be for the next step. Today, tomorrow, it will be the same old PSUs and the manufacturing. But beyond a point, buying some of these manufacturing type companies at 70 multiple and 80 multiple because they got 4 orders is also going to not work out in the long run. Today and tomorrow, they are the biggest movers, I guess.
Absolutely. So I guess there's consensus there. I mean, Samir, we've been speaking to people. I mean, we had a working Sunday, by the way, as well, just sharing.
Even
and
we
there's
had,
consensus.
we also had.
Oh, okay, then it's fine.
Otherwise, I could not have come on this call today morning with you.
No, glad. It's for the greater good, right? We're looking at the market, looking at what lies ahead. So for the greater good, it's a working weekend is fine this time. So, I just want to, before we talk more about sectors and what will do well, I just want to go back to the FPI issue for a second because that's the big elephant in the room, right? When will these FPIs emerge? And the reason that question is, sorry?
That is too easy. They will emerge from today onwards. Don't worry about them.
Oh, okay. So if you're saying they will emerge because they've been on the sidelines, and we had Bala, of Aditya Birla Sun Life Mutual Fund, he was really thumping the table and saying, guys, we will be the biggest beneficiaries of the move in the next 2 days, because the domestic guys, they're in, right? The foreign guys have been on the sidelines. Now, what could be the extent of it? I know these things are hard to guess, but was this the only reason, the lack of clarity on political continuity, was this the only reasons that FPIs have been absent for the last 6 months? What happens? I mean, can you sort of help us gauge the magnitude?
I saved one slide here from a Goldman presentation, which is right now I can just read out. So if you see last 4 or 5 years, actually disproportionate money has been put into India when they are putting money into emerging markets, and least amount has been taken out when they're taking out. So I'm just reading exact numbers. So in 2020, they took out 33 billion from Asia, and they put in 23 billion in India, which means ex-India, they took out $53 billion. Okay, or $56 billion, because the net was still 33 negative. Then in 2021, they pulled out 34 billion from emerging markets, but from Asian emerging markets, and in India, they put 3.8. So again, in a market where ex-India, they were taking out 36 billion, they put in 3 billion to India. And then in 22, it was more or less in line because of high interest rates, where the market, they took out 60 billion overall, of which 17 were from India. I'm just reading out direct numbers. And then 23, they put in total 31 billion, out of which 21 was in India. So point is, nobody's giving up on India. Don't worry. They can fine tune it a little bit, because somebody's averaging his China position. Somebody's embarrassed about putting in India now if he did not have it before. In 24, it's a bit negative in a sense, relatively, where they put in overall 12 billion. But from India, they have taken out 2.9. This is as of this report is dated 2-3 days ago. And this is all because they put 14 billion in Korea. Big picture being, in the last 24 years, in 20 years, they've been positive on India, and they put in on average 20-25 billion in good years and 5-10 billion in bad years, unless it's a negative year. So they will come in plus minus a few weeks from today. At the end of the year, this year, I don't think there would be a negative influence on the market. But they are somewhat idiots, and I am also an FII, and I want to benchmark against them. So I'm happy if they underperform me by not being bullish on India so far.
Okay. We take that on board. So they are going to come for sure. So let's talk about then the sectors. And you said financials, obviously, and that becomes a no-brainer anyway, largest part of the index still. Now, on the manufacturing and capex piece, where you said valuations are tough and buying is a challenge, I mean, how do you navigate that? Because if there's continuity, same policies, what do you do with these stocks?
So, recently these manufacturing funds came, and all these defense funds come up every day, and we look at them to see what are these guys going to buy, because they suddenly raise 5,000 crores and 8,000 crores or whatever they do raise. And then I saw that in the manufacturing index, oh really, I have all these manufacturing stocks, or I know about these stocks. These are not some new animals. They consider all the auto sector stocks as manufacturing. They consider many of the pharma stocks as manufacturing. They consider even HP, BP, which I call it oil and gas, as manufacturing. So if you literally look at it, other than one or two of these, PLI type stocks, it's the same old stocks. They are just repackaged to you as manufacturing stocks. It's the same old stock which I've always had all my life. I just don't call them manufacturing, but I call them by their sector names. You please see the index of manufacturing sector, and you'll find, everybody has these stocks for long. So maybe some of these become very visible symbols in a bull market for manufacturing, and that you may have or not have. It is most probably not going to change your life. Because others you anyway have.
Hi, Samir. Good morning and good to see you again.
So the question is, should I buy one Dixon? Should I buy one this? You have it, you don't have it. You'll have some 3% here or there. What I mean is, everybody already has manufacturing. It's just that they didn't realize that this was the label being given to these stocks.
All right. Hi, Samir. Good morning and good to hear your thoughts. Just want to squeeze in one quick question. Zomato is a stock that you all have been pretty bullish on. We had a note coming in on Friday, I think, so that was talking about competition intensifying out there. Your view on it, is the pie big enough, or do you think that is a genuine risk?
We love competition. Competition expands the market and brings in new consumers. This is the line everybody likes to say. I'm also saying, who cares? This is every day. Every day something happens. Even in our mutual fund business, lot of competition is coming in. That's part of life. The point is that somebody who's done well in 1 minute, you can't threaten him with new competition. You show it for 3 years, then we'll worry about it, or 2 years, or at least start. Just by saying it is okay. It's part of life. If for next 1 or 2, 3 years, these guys will grow very well. They have executed well. And then somebody else can also come in. It's okay. Because what is the target? Please understand. The target is the Kirana guy who is your competition, because you can get from him quickly yourself, or the Kirana fellow can send you his delivery boy or deliver it to you. That is the competition. Now you tell me, how can this competition last? The Kirana guys, poor guys, have to lose a large part. A, they are not open for 20 hours. These guys are open, let's say, for 20 hours in a day, or maybe even 24. Secondly, these guys buy in bulk. Third is these guys can also put in their private labels. They don't need to be on the prime land. They can be on the 4th floor in a dark store. They have technology. If you ask for something, not only them, even the new guy who can come in. But the point is, the market is Kirana to this up to a point. And that is still very far away. So don't be so precise about it. It's okay. It's generally a good stock. Doesn't have to be that big an outperformer as it has been in the past.
Right. No, got it. Samir, just one last point. There will be, when Friday, if we talk again on Friday, or we look at the market on Friday, there'll be stocks which are up 20, 25, 30%.
They will be.
That is, right? They will be. So tell us one.
I hope some of them I own.
Tell us.
They will be one of these. 20, I don't know. But 10%, 5, 6, many of them will be up today. That's what I'm saying. Why do you think I've come here enjoying, even though the market is about to open and I'm...
So Samir, let me turn the question then. Some you may already have in the portfolio, so you'll celebrate. How much are you pumping in today? 50, 100, 150, 200? How much are you buying today?
So we are a long short fund. I bought even on Friday. My net is now some 72. But the problem is I got new money on Friday because it was the last day of the month. So my net has come down and I have to do something. So maybe I'll buy 5-6% of either short covering or new stocks. That depends on when you let me go. But broadly, we have identified that up to what point we are willing to buy some stocks. Otherwise, we'll just cover a few more shorts.
No, we'll let you go back to your trading desk. It's an important day, Samir. Great conversation as always.
And Samir, we will continue this conversation tomorrow when the results come. That's around 11:30, 12 or so. So see you tomorrow. Thank you very much for joining us this important day. Appreciate it. We'll take a quick commercial break here. Amish Shah, Head of India Research at Bank of America Securities, will be with us on the sidelines of the conference, the Bank of America conference. He'll be joining Nigel there. You can see him. We're back after the quick commercial break. Stay with us.
Welcome back. As promised, we have Amish Shah, Managing Director and Head of India Research, who joins us from the BofA conference. Hi, Amish. Always good speaking to you. Well, we have got the exit polls as of now, and continuity is something that we're looking forward to. Now, one of the themes that you all have been rather bullish on is the infra space. The capex spend out there, you all have made this point, it has a multiplier effect as well. Do you continue to remain bullish on this theme? Some of these stocks have run up a goodish bit, but is that the key theme that you will look to play?
Absolutely, Nigel. First of all, good morning and thank you for coming down to our conference. Really appreciate you covering us. Look, on the capex theme, we went bullish about 3 years back. I continue to believe that these cycles are very long. I think we are just at the end of the 3rd year cycle. We will probably get into the 4th year of a 10-year cycle. I know that the stocks have rallied and it bothers some. I'm not sure. I'm not saying that it is going to be a smooth ride for all stocks. We ourselves have downgraded a few stocks, but on the cycle per se, I continue to stay extremely bullish. I think there are a lot of sunrise sectors in India on which India has not even started capex yet. But over the next, call it 3-5 years, these are going to become or very big themes. So call it data centers, semiconductors, biofuels, green hydrogen. We've heard the buzzwords. But the capex is not yet out there. We've still not started seeing the private capex come in the full steam. I think if you look at most of the PSUs or SOEs as you call them, all of them are trying to transition away from being ESG negative businesses towards ESG positive businesses.
True.
And that will require a lot of capex as well. So when you add it up all together with the government definitely spending money on capex, they're trying to repurpose it away from subsidies into productive infrastructure spending, the multiplier effect that you spoke about.
Yes.
With the return of private capex, PSU capex, some of the sunrise sectors, and now some of the international opportunities are picking up as well, on the, call it the Make in India theme, China +1.
Right.
Put it all together, I think there are plenty of legs for the cycle to continue.
A bit of a Goldilocks scenario playing out for India, right, as of now, because growth is good, inflation is rather tame. So that's good news. And as you mentioned, in terms of this capex cycle and the investment out there, maybe we are in year 3 or 4 out of the 10-year cycle. So that's good news. But you briefly spoke about PSUs as well. And that's been the flag bearer of the last 5 years or so. But some of these valuations, either they're trading at, at 5-year averages, or some of them at a sharp premium as well. How do you approach that theme? Because that's been the pocket of the market which has made plenty of money for investors.
So Nigel, it's always going to be a bottom-up approach. I would not say that everything PSU is good or bad. But broadly speaking, let's say, PSU within the financial space, within the defense space, and within the railway space are something where we are still very bullish on.
Okay.
But at the same time, PSUs, let's say within steel, within power utilities are where we think valuations have run ahead, and maybe there is a need for correction before, the themes are for real. Even within the power sector, we think India will need a lot of power capex. But I think the stocks have run ahead of delivery. Execution may falter. We may see correction, and then maybe is a good time to get in those.
All right, interesting. So banks, railways and defense pockets are still where, things which have good potential from there. And as you're mentioning, it's not going to be a one line, a straight line out there. I wanted to ask you about this. There's plenty of optimism being built into the markets, right? The Indian markets have been ranked outperformers. I recall in FY14, FY14 was a great year. We had the Modi 1.0, so to call it, that came into the markets, and the expectations were sky high. But in 2015, actually had a negative year for the Nifty. What do you expect this time around? Do you believe that maybe, in fact, something like that could play out? Expectations are sky high. You're having a third term of the ruling government whose measures have been spot on. Is there a possibility we peak out in the near term?
So, Nigel, first of all, it will depend how much higher we go up this year, first of all, for us to take a view for next year. But
because I'm talking about today, we're likely to be at fresh all-time highs. So, 23,200 odd could be the number that we're looking at just to start off with. How much of the good news is in the price?
So, Nigel, I would say that I continue to be bullish markets. In fact, on the Nifty number specifically, we are saying that as a base case, Nifty could be 24,500 by the end of this year.
All right.
And that's a base case. If the government kickstarts reforms that we are all been hoping for, then I think, with the visibility that these reforms can bring in sustainable economic growth over long term, I think there's a reason to believe that valuation multiples can sustain higher for longer.
Okay.
Now, one of the things I would say that I would compare or contrast versus the 2014-15 that you spoke about, that was a change in government.
Right.
And a lot of policy making had to be done.
Yes.
And as a result, the pace at which you saw the reforms was not, meaning I would say was good, but not as good as it could be this time.
Okay.
Because this time around, when you do the checks with bureaucrats, the policy circles, there are many reforms which are in the draft legislation ready stage. The intent to do those is also very high. So if you do get a political continuity, and which is a very big if, we will figure it out next tomorrow. But if you do get that continuity with the mandate that the exit polls are forecasting, I think the pace at which you can now do the policy making can be much rapid. And that I would argue could actually help markets do very well.
Very important point. 24,000 by the end of this year. So you believe there is still some more upside despite the big move that we're seeing. What about consumption? Plenty of debate out there. The rural part of the market of the economy is still struggling. While the way Indians are consuming actually has changed. The wants are more, discretionary spends are likely to move up as well. How do you approach that theme, the consumption basket?
So capex over consumption, in my mind, I think capex will outperform consumption. To your point, that rural seems to have bottomed, maybe at the margin now seems to be reflecting. I agree that, some of these, call it staples, discretionary, they might have a little bit of a pop right now. but am I convinced of these being 4, 5, 10-year themes? I'm not so much convinced. I think capex is the next big theme, and I think capex will continue to outperform consumption. Consumption, I think, can have a technical pop at this point in time on the back of the rural recovery.
Okay, all right, Amish, always a pleasure talking to you. Nifty at around 24,000, that's the year-end target. Themes that you like from the PSU basket: railways, defense, as well as select banks, and capex over consumption. It's been good speaking to you. Wishing you all the best with regard to the conference, and we'll keep touching base with you as the conference progresses as well.
Thank you again.
Well, time to slip into a short break, I think. We come back and we'll get more market opinion on the other side. Stay with us.
Okay, we'll start getting the pre-open rates very, very soon, and we are gearing up for a bumper start. Let's talk about levels and technicals then. Shrikant Chauhan of Kotak as well as Sudarshan Sukhani joining in for some ideas and some perspective. Thank you, gentlemen, for being with us. Sudarshan, so we all know we are preparing for the gap up, but then what next? I mean, how do you trade it? What's the advice for today?
Yeah, good morning. Well, last week my advice was consistent. Buy the Nifty on all the dips that we saw, and don't worry about this week. Wait for Monday. Now, today is Monday. Now, clearly, the trade that we took last week is working out. But the point is, can you go long now? That's a difficult task. I think you have to wait for a significant correction. If you have still not entered the market, then you have to wait for 200 to 300 point intraday dips, whether they come today or tomorrow. And then it still justifies going long in the Nifty and the Bank Nifty.
Okay, by the way, the pre-open rates are in an 850 points. That's the gap up that the pre-open is right now indicating, 23,000, almost 23,400. That's the extent of the opening gains that we are perhaps looking at. Let me quickly go to Shrikant as well. Shrikant, the screen is telling us it's going to be maybe 800 to 900 points higher. What would you do next? Oh, I think we don't have that feed through with Shrikant. We'll try and fix that and go back to him. But Sudarshan, I mean, yeah, so pre-open, I mean, 800, 850 points higher. What's the advice? Should you look at the Bank Nifty? Should you focus more on individual stocks? What to do?
Well, my advice is, if you have long positions from last week, and you should be having if you were watching this channel, then take profits now and wait for significant intraday dips to go long again. Those who are not long must wait for a dip. Don't enter at the open.
Okay, don't enter at the open, let it stabilize, watch for the dip and then go in. That is Sudarshan's advice. Sudarshan, on individual stocks, I mean, I'll just pull up some of the rates. By the way, let's get some rates going as well. Adani Enterprises 10%, Adani Ports 10%, NTPC, ONGC, ICICI Bank, Coal India, BPCL. Your opening rates are between 5% to 10% higher on all of these stocks that I just read out. Tata Steel, JSW Steel, Reliance, 4%. I mean, these are some very early trades that we are getting, and these are all pre-open, by the way. But yeah, that's the extent of the up move that perhaps can play out. So, Darshan, on individual stocks, what would you keep your eye on? And any opening trades for individual stocks?
Well, I have a list of stocks, and then traders have to manage that stop loss as well as the entry point. Because as I've suggested, don't enter at the open. The markets will cool down. That's a given. Coal India is a buying opportunity with a stop under 460. BHEL is a buy with a stop under 290. GAIL is another buying opportunity. It's coming out of a very decent consolidation. Buy with a stop under 198. And NMDC is a buy with a stop under 245. As you've noted probably, all of them are PSU stocks. I think there's a big rally coming. Don't make the mistake of running after a gap up. You will get better prices.
Okay. Shrikant, I think we have him back on the line. Shrikant, if you can hear me. So 800-point gap up. How are you going to trade it?
Good morning, Surabhi. Good morning, everyone. I think, there is certainly we are going to see a record opening at 23,350, 400 levels. But I think based on extensions, based on retracements, if we see the market is opening somewhere close to these levels, then it is better to take some profit on long positions. Because I'm of the view that the main event is still pending. So the market may consolidate between the range of 23,400 and 23,000, maybe 100, which was the previous highest level. So between these levels, we can see some consolidation. But broadly, based on technical formation, we are of the view that the markets are heading for at least 23,800. and in the
Right.
best case scenario, 24,200 sort of levels.
Okay. Got it. Srikanth, I'll come back to you for stocks in a bit from now, but appreciate you joining in. Sudarshan, great to have you with us as well, and you'll continue this conversation through the course of the day because it's all about markets. Madhu Khela is with us. He's founder at MK Ventures. Madhu, good morning. Great to have you with us here. It's a pleasure. It's a big day. And I was sort of, making a comment in the morning that it's a day which I think we'll remember for many years to come. So a big gap up and a sign of things to come. Just your first reaction. I mean, what does the market do from here, Madhu, beyond today? Because today the rates are already there, 800 points higher. Does the base itself shift higher for the market? Do we see some consolidation after the immediate election result? Or do you think it's going to be higher, larger, and for longer? Your thoughts?
Sure. Prashant, thank you so much, and good morning. Very nice to have, very nice to be here. I think you hit the nail, Prashant. It is not about days. It is not about today. I think the important thing is to understand that this is an absolutely unprecedented time. As I said in your own channel a few months back, this is Amrit Kal. And this is Amrit Kal for equity investors for sure. So I think the important thing is that, how much of your allocation is there in equity and how long a view you are willing to take. Because, these events will come, markets will open up, gap up. But if you are really structurally positioned for equity, I think everything is really, really falling well for India. If you look at, all our macro indicators, inflation, interest rate, fiscal deficit, tax collection, GDP growth rate, and the way India is now positioned even within the international markets, where geopolitically we are positioned in a fantastic manner. So I think there is a significant opportunity for wealth creation over the next 5 to 10 years. And that is the biggest call. And that is why how much you are really positioned in equity. What is your allocation? That is the important question to ask yourself. The other thing, Prashant, obviously markets have run up a lot. There are very rich valuation in certain pockets. So when you actually go to buy individual stock, even a guy like me is struggling because looking at the valuation. But what I figured out over the last few days, that if you are willing to take, because you are late in the party, if you're a new buyer, if you're an old buyer, the choice is very clear that you have to be staying with the market and you have to staying with your portfolio, you have to staying with your investment. But if you're a new buyer and wanting to put new money in the market, then, if you look at immediate making money, that is going to be tough because you are coming at 23,000 Nifty and that's not going to be easy. So if you look at next 3 years, if you start to look at 2026-27 from earning perspective, then you can find a lot of investable ideas. So that is what my focus is, to really find companies which can grow earnings significantly over the next 3 years. And Prashant, you and I have seen in the markets for last 30 years, basically, if the backdrop is positive, then there is tremendous opportunity to buy individual stocks. And that is what the focus should be, to really buy individual stocks because the backdrop of the market is very, very positive. And lastly, I would say this is time for wealth creation, my friend, and it is not time for income generation.
Okay, that's it's a punchy, nice one. And the point is, the size of the cycle determines how much money you can make, right, over a period of time. And this seems that this is extending, it's bigger in that sense. So with that 3-year kind of view, right, not chasing what is sexy today, what is in fashion, momentum today, but because you must take a slightly longish view because you're coming in at 23,000. What are the areas where you are finding a lot of opportunities, Madhu? Is it again manufacturing? Because that is we are seeing a renaissance of manufacturing in the country, right, which was not there for the last couple of decades, but we're starting to see that. Is that one big sort of area? What's the sense?
Prashant, India is the area, honestly speaking, like a buffet, as my friend, philosopher and guide, Rakesh Jhunjhunwala used to say, that there is a buffet out there. You have to choose what you want to eat and you make sure that you don't eat so much that there is indigestion. That's the only thing which you have to be careful about. But otherwise, there will be stock-specific opportunities in manufacturing, in chemical, pharmaceutical. There'll be, I think, financial sector has been underperforming for last 2 years. So there'll be really great opportunities in some select private banks and select, financial stock, capital market related stocks. So the list is really long. Prashant, I will just repeat once again. The mood point is, are you positioned in the right stocks? And do you have really the view of 3 to 5 years? And can you digest this volatility which will happen? And that, if you have that focus, then I'm sure even today at 23,000 Nifty, you can find many ideas where you can make a lot of wealth.
Madhu, hi, good morning. So good to have you with us on this morning. Like Prashant was saying, I mean, these are days that we'll remember, right? Either ways, whatever happens. But these kind of moments in these days you remember. We were in conversation with Samir just a while back, and I thought he made an excellent point. He said, let's talk manufacturing. He said, the name is a wrapper. Manufacturing involves, and it's true, everything from a ball bearing company to a large manufacturer to someone who's doing roads and capex to someone who's making boilers. So now help us, distill this even further when you're looking at valuations and you don't want to get burnt, right? Next 3 years, what do you like the most in this manufacturing / capex themes? If you could narrow it down a bit for us.
So Surabhi, as I said, that, one financial sector clearly looks like a very, very good risk reward from my perspective. And within manufacturing, there will be individual sectors which you need to focus on, as you rightly said. So I see opportunities even in the sectors. And see, if you are talking about manufacturing, then you have to clearly take a 3 to 5 year view. Because if you're looking at stocks from a next year perspective, then they look really expensive. But the certainty of earning, which is there in India in a lot of these companies, and if you are willing to take a 3 to 4 year view, then you will be able to find a lot of ideas. So let's say I like a couple of forging companies. I like some companies even in auto ancillaries. I just said the area is very, very wide. I am very, very bullish on select names in pharmaceutical, which is again part of China, India plus one. So Surbhi, today's time is really, I would just like to reiterate, it is not about individual companies or 1 or 2 sectors. It is about your own conviction in India. It is about being convinced, even though market is at 23,000, is there a significant wealth creation opportunity which is left over the next 5 to 10 years? That is a moot question to be answered. And to my mind, there is the decisive yes to that question. And if you are willing to take that bet, and if you are an individual investor, of course, you put money in AIF or a mutual fund, so your job is easy. But if you are even a stock picker, and if you have this time frame, I would just like to reiterate only one thing: take that view, focus on wealth creation and not on income generation.
So, Madhu, that point is very well taken, that you need to have, patience. You need to be looking at the long term. But, just on the here and now, just to, come back to the market today, how much of a pop do you think will digest it? I mean, whether it is 350 or whether it is 360 or whatever that number might be, what's your best case guess? 2%, 3%, 4%? What would you expect over the next 2 days? Just talking about the here and now.
Surabhi, I think market is very interestingly poised. To best of my understanding of the market, there is significant short positions by the FIIs. And even the domestic investors, whether it is most of the HNI investors were very carefully positioned going into this large event, because there is a large amount of wealth which got created. So people were in a mode where people wanted to be careful, save the money, right? So markets are technically very, very interestingly poised. Now, whether they open 500 point higher or 700 point higher, I see no significant downside even from a next 2, 3, 4 days perspective. However high we open, there will be tremendous amount of buying which is waiting on the sideline if markets were to correct even few hundred points from where they open.
Okay, all right. Madhu, so today we will get a new high. Tomorrow we'll get a higher high. I mean, okay, very near term, but possible.
Prashant, my friend, you and I have been very long. It's so difficult to predict 1 or 2 days. And I am saying what will be achieved by predicting this? The big thing which I'm telling you, my friend, is that this is time of India. We are, for last 7-8 years, we have spent, this government has done a tremendous job laying the foundation. I think the next 5 years, I am very, very bullish, Prashant. That's all I would like to say.
All right. We leave you to it, Madhu. And I think you want to be with the markets as well as we open. Appreciate you joining in and running us through that perspective. Great to get. And we'll speak again tomorrow once we actually have the full final results, and we'll talk more then. So we got the sort of opening levels which are starting to appear. And I think it's going to be a big, big one, right? I mean, it's just a few seconds to go as far as market opening is concerned. And the first rate should start to flow in almost immediately, anytime now. So there you go. So the markets are trading, and the verdict is clear. It's a new all-time high, 23,300 plus. The previous high was about 23,310, 23,110. So this is a significant sort of higher high. So, beating the previous high, just like the exit polls have beaten market expectations by a wide margin. And where do we go from here is the question, right? So hovering around that 23,600, 23,670 odd levels is where we are. The base has moved up, right? So you got to start to get used to 23,300 sort of rolling off your tongue. Adani stocks are flying off the shelf. Adani Enterprises is up 8%. Adani Ports is up 9%. Adani Power is up 14%. We were talking about names like the railway stocks, etc. RVNL is up 10%. Coal India is up 5%. So, I was saying this in the morning. It's basically focus on what is already doing well, and that momentum should continue. At least, that'll participate the maximum in this post-election pop. NBCC, Mazgaon Dock is up 5.5%. So that flavor of defense coming through as well. IRCTC, NCC, Indian Bank. I mean, it's a broad sort of swath of what is doing very, very well. Market breadth is exceedingly positive. And I think, it's a very good-looking screen, all in all, that we have got going. Surabhi.
Prashant, they say, right, don't bet against the house. And if the house is going to continue, you do not bet against it. Look at the PSU move. The CPSE index is up 5.5%, flying away. The Nifty PSE index is up about 5%. The PSU banking index is up about 5%. There is absolutely no stopping the charge on these stocks, and that's really the big headline. So PSUs along with Adani's, that's your first major headline coming in. Let me try and look beyond. Actually, it's hard to find anything else, but IRFC, PFC, REC, all these stocks. Power Grid is surging, big Nifty stock, and it's surging 8% as we speak. NHPC and the likes. Now, on the non-PSU side, JSW is looking very interesting, about 6-7% higher on this one. Some of the other names like Prestige Estates from the real estate pack. I'm really trying to find the non-PSU names. Otherwise, it's just an all-out PSU charge. There would be an IRB Infra. So obviously, CapEx, construction, etc., infrastructure, 8.5% up on an IRB Infra. Angel 1 is up about 6% as we start off the day. So these are some of the key gainers on the non-PSU side. But otherwise, it's an out-and-out PSU roaring rally. Bank of Baroda, NHBC, a BEL, a Hoodco, you name it, it's completely out there. Just back to the... by the way, the market's cooled off a little bit from the absolute starting point. Back to the Nifty to see the non-PSUs there. And obviously, banks are having a great session. 3.5% up on the Bank Nifty. The Bank Nifty is doing better than the Nifty right now. Axis Bank is the one that's looking good, 4.5% higher. ICICI Bank, 3.5% up as well. So those are the big names. M&M is having a good start. Remember, a lot of these auto stocks actually had very subdued numbers for the month gone by and a little lower than estimates. But today is not the day you react to monthly numbers. Today is big picture buying, and that's exactly what's showing up on the screen. Shriram Finance is looking interesting, 7% almost on Shriram Finance. That's one of the best performing non-bank financials today. Barring Aisha, every other Nifty stock, actually even Aisha, is sticking green right now. So almost 49 out of 50 stocks, or almost 50 on 50 stocks in positive territory. That's the kind of opening that we've had. 620 points higher, but Prashant, it is cooling off to a little bit, to some extent. Now 23,154. Remember, the previous all-time high was 23,110. So after the gap up, we're seeing the first small dip coming through. I think we have Nigel also with us. If I can toss to you. No, I don't think we have Nigel there, but that's the screen.
No, absolutely. And SBI, by the way, Surabhi, is the largest volume-led gainer right now, right? So that's interesting to see. So 870 or so in SBI. We were talking about financials, right? And a lot of the focus is on private financials, HDFC Bank, Kotak Bank, Axis, etc. But SBI is the largest largest bank. I mean, it is the largest bank. It's also the biggest gainer this morning coming through. So it's up on your screen, and look at the volume. 7 million shares now already coming through. I want to just sort of reiterate, the Adani Group stocks are all flying between 6 and 14% higher, depending on what you really look at this point in time. And of course, Surabhi mentioned a sort of whole long list of names which are doing very well. And they're also BEL, NHPC, RVNL, Power Grid, IRFC, PFC. I mean, PSUs. That's the number one area where there is this, big high beta move which is coming through. Hoodco, REC, IRCON. I mean, actually, my list here of the top volume-led gainers is all populated by PSUs. I mean, about 85% of it is all PSUs as we begin this session. Oil marketing companies, HPCL, I'm not sure if Surabhi mentioned that, but HPCL is up 7% and should not be alone. IOC and BP will also come up. And it should, I think, as a pack also be doing very well. BPCL is up about 4%. IOC is up about 4% as well. So, again, PSUs, but, different sectors, but within the broad umbrella of the PSU space, which is doing exceedingly well. Let's actually get some more opinion. And Ashwini Agarwal is founder and partner at Demeter Advisors. He's with us with some perspective. Ashwini, good to have you with us here. Thanks very much. 23,150. Around, I mean, the high was made about 23,350 or so. And there's been a bit of a cool-off, 200-point cool-off. That's understandable. But what's your sense, Ashwini, if these numbers hold, and as some are saying they even get better tomorrow when we get the actual results, do you think the base itself for the market moves a little higher? And we're talking 23,300 plus 23,500 over the next many weeks? What's the sense?
Morning, Prashant. The way I think about it is that I think the market is excited that there is policy continuity. And the policy continuity signals that India might continue to grow at a faster pace than some people might have estimated prior to the outcome of the elections. The market is also trying to digest the fourth quarter GDP numbers and the GST numbers. Both, I would say, were slightly ahead of expectations. And I think the administration's focus on driving growth through manufacturing, through job creation, creating an environment that supports investment, both into infrastructure, which might be taxpayer funded, as well as private infrastructure or private investment, which is led by exports and domestic consumption, both. I think these are very, very important drivers of long-term value creation. So, I don't know what happens in the short run. I mean, short-term rally could be driven by short covering. Some people were positioned to protect, a significant downside in case the outcome of the elections was contrary to what appears to have happened. But I think, leave the short term aside. I'm not worried about the short term. I mean, short term, we could be up, we could be down. It doesn't matter. I think in the long term, what I'm seeing is prospects of sustained long-term growth, which is very exciting. I think also there will be some speed bumps along the way, including potential reforms to capital gains taxes in the budget. So we'll have to see how we navigate those. But overall, I think from a long-term perspective, this outcome is very good for the economy and therefore very good for the markets.
Okay, well, that is the long-term view. In the near term, still 600 points up, but closer to the 23,000 mark right now. So a bit of a cool-off from the absolute sort of opening bull charge that we saw. Ashwini, hi, great to have you with us. So, the long-term is fine. I think long-term people do understand that there's a lot happening in this economy, in this marketplace. But for the near term, I think what people are grappling with is that you don't have the advantage of buying stocks at 22,000 Nifty or 21,500 Nifty. You have to buy at all-time highs, and that's always the more difficult thing to do, right? So how are you navigating it, and where are you comfortable deploying fresh money?
This will be a great question. Good morning. The way I think about it is, more bottom-up when I'm looking to deploy cash, okay? And the way I think about top-down is allocation. So two pieces there. One is if, an investor is on the lower end of his equity exposure in his overall allocation, I would say that from a medium term, it's not late to increase that allocation. Now, you may get an opportunity a couple of months down the road for events that are yet to unfold, where you may be able to invest a couple of thousand points lower on the Nifty. But in my view, longer term, these things don't matter. I think longer term, you have to look at the narrative as to what's driving earnings and what's driving the economy and take a call. So that's on the allocation front. On a bottom-up front, if you think about it, I think banking and financials are still reasonably valued. This sector has, by and large, underperformed the broader markets for the last 6 to 12 months. And I think there are a lot of opportunities, both in the large cap and in the small cap there. I think chemicals, pharmaceuticals, upstream chemicals in particular, some agrochemicals, these are areas where I see some value. Manufacturing, railways, infrastructure, which are the buzzwords and have been the buzzwords for some time. I find them very expensive on a bottom-up basis, but who knows, on a 4 or 5 year basis, they might also do well. But I would say that those are places that I would stay out of for the moment and focus on where I can find value. I think, PSUs as a basket has done extremely well over the last couple of years. Some of the PSUs have become very expensive, and we still don't know what the new administration will do vis-a-vis privatization. I would be keen to see some large, healthy companies getting privatized. And if that happens, you could see the momentum in PSUs continue. But on a bottom-up valuation basis, barring the PSU banks, there's not much value in the PSUs, is how I see it.
Okay, Ashwini, just stay on. We will welcome in one more voice into the conversation to make sense of what is indeed turning out to be a very significant morning for the market. Pankaj Tibrewal, founder and CIO at Ikigai Asset Managers, is with us. Pankaj, thanks so much for joining in. Good to have you on. Gap up has happened along expected lines. The question is, what now? And what are we setting ourselves up for tomorrow? Today is still the precursor, right? The pre-board, as Prashant keeps calling it. Tomorrow is the real test.
Good morning, Surbi. I think after 2 terms, coming again with a 2/3 of majority as the exit polls suggest is an amazing one. We believe that markets post tomorrow, assuming there's no major negative surprises come up in comparison to the exit polls, markets will change the narrative towards who's becoming or who's taking which portfolio in the ministry and towards the budget. And I think the big event will be behind us. I think going from here, I think what markets will look at is, one, continuity of the policy. And I think the first term was all about cleaning up, getting the acts in right, getting the reforms in place. The second term was laying the foundation for manufacturing, industrial push, and infra. And I think the continuity of policy, along with the welfare of people at the bottom of the pyramid, could be the major drivers for the market going forward. And so we don't forget, market is a sangam of fundamentals, flow, and sentiment. The flow and sentiment all are with us. Fundamentals on the earnings side has been very strong, barring fourth quarter. And I would like to suggest, or I would like to indicate that the fourth quarter numbers hints towards some slowing down on the non-BFSI. I look at NSE 500 companies. The earnings growth was strong at 14%. But when you dissect between BFSI and non-BFSI, the 87 BFSI company earning growth was 24%, but 412 companies on the non-BFSI side grew only by 8%. So I think the margin tailwind is coming down, and the top line has been sluggish at about 4 to 5%. We should keep that in mind because finally stocks are slave of earnings. So flow is positive, sentiment is extremely positive. We need to see whether fundamentals also catches up as you move ahead into the markets.
Sure. I have a quick question for both the gentlemen, if we can have actually both Ashwini and Pankaj as well, so we can see both of them. Quick question on policy continuity from here on, because there's a growing chatter in the market. Obviously, the next is about who gets what ministry. And Pankaj and Ashwini, I mean, increasingly we are hearing a lot of chatter and nervousness around capital gains tax. I don't know if that's just real chatter or if that's a real concern. Very quickly, Ashwini, I mean, in terms of who will continue to head the ministry, it's a completely speculative question, I know. But in terms of financial policy continuity, what are you expecting? And are you really worried on tax?
So, Surbhi, I'm just taking a cue from what has been said by the Finance Secretary and also mentioned by Finance Minister Sitharaman earlier this year, not in the last couple of months, but earlier this year, that they want to rationalize capital gains tax across asset classes and across, holding periods. Now, if you do a rationalization, that means that that indicates to me at least, that some of the higher rates will be brought down. From a tax neutrality perspective, that would indicate that the lower end of the band on some of those capital gains tax rates need to go up for the government revenues to remain where they are or hopefully grow from here. I think the vision that Prime Minister Modi has for India, which includes public welfare, as Pankaj very correctly mentioned, requires that the tax revenues continue to grow at a healthy pace. So, putting all this together, my expectation would be of increase in short-term capital gains tax, or at least the period of holding for the long-term capital gains tax. That's what I would expect from the budget. My sense is that my hope is that it won't be very, very significant, but we'll see how that goes along.
Yeah. No, got that. Pankaj, you can, good morning, guys. Prashant here. Pankaj, morning. Good to see you on a day like today. You can talk stocks now, Pankaj, right? I'm going to give it a shot at least. I was telling Samir in the morning, by the end of the week, I mean, if these polls hold, there will be stocks which are up 30-35%, Friday to Friday. So I'm not talking about what will do well this week, but give us some ideas. I mean, where one can make absolute returns from here. For our viewers, actually, yes.
Good morning, Prashant. I think the entire narrative is around manufacturing, industrials, cap goods. And if you remember 4 or 5 years back, we were the first fund house at Kotak to call for that from an upsurge on the manufacturing and infra perspective. But when I look at bottom up, I think the expectation of the market from some of these names on railway, defense, PSUs are at crazy levels. And I believe it will be quite challenging for managements to keep up to their expectations. On the other hand, 5 years back, the darlings of the market, the consumption names, are almost trading at similar valuations or lower than what they were at March 2019. We believe that this term could be welfare of the people at the bottom of the pyramid. And it makes sense to, along with the infra push, manufacturing, all those narratives and the policy continuation, look at consumption names both on discretionary and the FMCG. Just to give you some data points, the FMCG weightage in the NSE 500 is now at 8%, which is about 13-year low. And whenever we have seen that happening, probably FMCG has surprised us, both on staples and discretionary. So that's a contrarian call today, but I think that could make you money over the next 5 years. The second point is the financials. I think private sector banks have derated massively. They have delivered on earnings growth. But from here on, for the next couple of years, I think that could be another space from a bottom-up perspective where one could make money. The third space is pharma. We have seen for the consecutive last couple of quarters that pharma has delivered on earnings surprise. We believe that going forward into the next couple of quarters, with US generics being in a sweet spot right now, I think pharma names can throw a positive surprise there as well. These are the three sectors which markets are negating today. And we believe there is opportunity from a bottom-up perspective on all these three sectors, along with obviously infra push, along with manufacturing, and along with industrial names. But those are very expensive as we speak today.
Yeah. And if I can pin you down a little bit more, consumption, consumer discretionary, FMCG, I mean, are we talking about, go one level down. Are we talking about, say, QSR name? I mean, is that as a category? Do you like that space? Are we looking at, just pure staples or yeah?
So, Prashant, we are looking at names where there's non-linearity on the margin side. Many of these companies have continued to spend on expansion, expand their footprints, but because of the sluggish SSG growth, the margins have not yet, moved up. We believe that many names have non-linearity on margins. And once you start seeing early green shoots, and over the last 40 days, I have been on road for roadshows as well as meeting companies, and there have been evidence of early green shoots on consumption side. Managements have been saying that this quarter, despite of no wedding season, the SSG growth has started to turn positive, and the commentary on the sidelines has started to be positive again. So I believe that that's a space one should start to work on. Maybe over the next 6-12 months, I think one could get an opportunity in that space, contrary to the current belief that all this government will do is only about manufacturing, infra, capital goods. But I think the bottom of the pyramid is not in great shape. My call would be that this term of the government will be also for welfare of the people at the bottom of the pyramid.
And absolutely, I take that call. I mean, because it has been an under-owned part of the market for a while. So perhaps that's where the next sort of rush of money could head. Just want to point out there's some cool-off in the market, and the sectors where it's most apparent right now is the IT space and a couple of pharma stocks. That's where if you see the intraday charts right from the morning gap up, a bit of a cool-off on stocks like LTI Mindtree, on Infosys, HCL Technology, Cipla, Divi's. IT pharma, basically a mild cool-off from the opening gap up highs. Gentlemen, have to be balanced. I have to ask you about risks as well, because while it's all very well and we're extremely bullish, focused on the medium to long term, now, is there a risk out there? And I'm not talking about tomorrow's risk. I mean, let's work with the assumption that the exit poll results are, they turn into the actual results as well. So aside of that, any other risks that perhaps investors are ignoring in this mood of euphoria? Quickly, Ashwini, and then I'll come to Pankaj.
Surabhi, the biggest risk in the market is valuations. I mean, valuations are very, very stretched in certain pockets of the market. And if you look at the past bull market cycles, whether it is 2008, whether it is 2000, you will find that, there is one section of the market that starts trading at crazy valuations, and then something happens which gets the bubble to deflate. So, that's one risk, because we are dealing with extreme amount of euphoria in certain pockets of the market, which is a very classic bull market phenomenon. Whether we are at the top or we are 20% away from the top, nobody knows. So that's one. Second is I continue to worry about the global markets. I think interest rate cuts are not likely anytime soon anywhere in the world. And I think the markets have kind of taken that shift in narrative over the last 6 months quite well. But I hope that it stays this way, kind of Goldilocks, where growth continues to surprise on the positive side, so that interest rates don't hurt. But if the opposite happens, then I think global narrative might take over a little bit in the near term. So those are some of the risks that I see at my end.
Okay, all right, Pankaj, quick last word with you, because the thing with valuations is they can stay higher for a lot longer than we can remain sane and rational, right? That's what they say in the market. Anything that you would want to leave us with in terms of final advice?
Absolutely, Surabhi. I think mistakes are made at the peak of the market. So one should always keep assessing the risk of the portfolio. And I think the biggest risk on the market is the derivative side, I would say. We are 2/3 of the world derivative volumes, whereas on the overall market cap, we are just 3.5-4%. So I think we need to keep in mind that over the last 3 years, the new investors which have come into the market have only seen the upside into the market rather than a volatile market per se. So one needs to keep in mind that the derivative volumes are at a record high, and that could also act as some kind of a risk to the market, apart from the global part where interest rates can remain higher for longer. And that could mean many parts of the global market could be in turmoil over to a medium to long term, because people were expecting interest rate cuts to start happening at the start of the year. So keep these things in mind from a risk, and keep assessing your risk parameter from time to time. Don't get carried away only by the market momentum. Valuations are slightly on the higher zone. We need to find pockets of value. And I think if we do that from asset allocation perspective, we should be fine.
All right, we'll leave it there. Both of you, thanks very much for joining us, Pankaj and Ashwini. And, yesterday was the day before yesterday was pre-boards. Finals are tomorrow. So we'll have to talk to you again after we get the final exam results. So, we're all assuming these are the numbers and hopefully these are the numbers, but, it's not done till it's done, as they say. So thank you very much for joining us this morning.
Thank you.
Great chat. As always. Let's focus on sort of some corporate commentary as well. Muthoot Finance is the first corporate on our program now. The fourth quarter earnings came in above street expectations, strong growth and healthy improvement in asset quality as well. Let's get the chat going with George Alexander Muthoot, Managing Director of the company, who's with us. Mr. Muthoot, good morning. Great to have you with us here. Thank you very much for your time. Prashant this side, I trust you've also been watching the exit poll numbers and our programming. And of course, what the market is doing. Up and up so far. But let's talk about business, Mr. Muthoot. For FY25, sir, you are guiding for a minimum 15% growth in your gold loan book, right?
Yes. That is the minimum. That is what we have been guiding for the last about 7 years, I think.
So, yes. So, I'm just interested in that minimum. Minimum. What can be the... Is that the base case and you'll most definitely do better? Can that be 20%? Because competitive intensity in the space has gone down, especially with players like IIFL Finance, etc., having trouble on their on the gold side, on the regulatory side. So maybe the things have become a little more clearer on the competitive intensity side for you. So can you do 20? Go on, sir.
We can do 20, 25, but then I don't want to give guidance on that. That's all. If the market is there, if the business is there, we can do much more. So, but Q1 of this year has also been quite good till now, and I think we are on a good track. The disbursements in Q1 is pretty good. Yeah.
Much better than Q1 of last year?
I wouldn't like to say that, but yes, as of now, much better. Much better.
Okay. Mr. Muthoot, hi, good morning, sir. Good to have you here. There's also been disruption, right, with the RBI action in the gold financing space and one specific entity, obviously under radar, cease and desist from any further business. What's been your market share gain? Just trying to understand the impact of that one RBI order and how things are progressing because of that, ruling that came in or the reminder that came in on cash dispersals.
Yeah. I think, all the gold loan companies, mainly they are all based in Cochin. All our head offices in Cochin. Other than one company, all the others, head offices are in Cochin. And we have been the Kerala-based NBFCs have been doing a good job. Maybe regulatory-wise, there was never been any complaint in the last 15 years of every year there is inspection by RBI. So we have been very good. But of course, they have found something wrong in this particular company. So I think it is related to that. And the instructions which they gave about this 20,000, it was always there, but there was a gray area, whether it is 20,000 or 2 lakhs. Now that they have confirmed it, that it is only 20,000. So it's not an issue for us. See, in fact, all our customers, we are encouraging them to do the UPI and also the IMPS, which are just 10 minutes or 3 minutes, they get the money. So people are not at all concerned with that. And since it is applicable to all NBFCs and banks, I don't think there is any issue there.
No, absolutely.
That can happen is some of these people may go to some local Malaysians. It was always there earlier also.
No, absolutely, sir. That's uniform playing field for everybody. I was just trying to understand that because one entity has been stopped from business right now. What is your market share gain, if at all? What is your market share, if you could share that with us? And what's your sort of projection as we go forward in the year in terms of market share?
No, just because one company has stopped business or has been forced to stop business, that is not changing the equations there. We will have our own growth. It is not based on one person taking away some business, etc. So I think the fact that one company is not there is not substantial, nothing substantial.
Okay, got it, sir. So then let's move on to other issues like margins. And you've done really well over there, right? Your net interest margins are 11.6.
Yeah.
So sequentially, the margins have improved, though they're down year on year. I'm just reiterating for the benefit of our viewers. Year on year, margins come down from 12.26 to 11.6. But sequentially, there has been an improvement. So just tell us, what's the margin trajectory? What's the cost of funds like? What are you hoping to maintain the margin at for this year?
We have always been saying that a margin of 10% plus up to 11% is actually decent. It is good. And our ROA has also been good. We have been able to generate some 5-6% of ROA, which is actually very good for such a company. So I think the margins will definitely be there. The margins can compress only if the cost of funds goes up. But when the cost of funds goes up considerably, we will pass it on to the customer. Maybe a 10-15 basis points we'll be able to absorb in our books. But otherwise, if it goes up again, we'll just, because the market, the rate is going up, then we will pass it on to the customer. So we will try to maintain our 10-11% of margin.
Not 10-11%.
Could be, yes.
Yeah. No, again, I mean, with competitive intensity on loan pricing easing, I'm again going back to competition. Could margins be a little better? 11.5, 12? Possible?
I think, sir, one thing is these are all very short-term loans, 3 months, 6 months loans. So it is not like giving a 15-year loan at some percentage and then sticking on to that. These are 3 months loans and average tenure is only 3 to 4 months. So this margins keeps on changing. But then, as I said, we will see that our margins remain at the 10-11%. And just because the market is able to bear, we wouldn't want to tax our customers for that. No, not at all. We would like to be a little considerate to our customers also. The 10-11% is decent and good for us. I think we should maintain that.
Gold, and we've discussed this before, the fact that your potential and how fast you grow, perhaps in a way, is also tied at the hip to gold prices themselves. Gold prices have done very well. This year, if there was a bit of a pullback in gold prices, it could happen, right? It's an international commodity. Could that hurt prospects for both growth and margins? Could you give us some?
When the gold price goes up, everybody thinks of gold. People feel that the gold which is lying with me, he thinks about the gold. When the price is going up and everybody is writing about gold and gold price, etc., he feels that I have some gold with me, why not I use it? Other than that, there is not much difference. Of course, there may be a small marginal growth difference because of the gold price, but then it won't be substantial. We have seen this in the so many years that I sold earlier also. We've been able to maintain the 15% in spite of ups and downs and gold price, etc. So we will continue to do that, sir.
Okay. That's on the gold loan business. Sir, can you also give us an update on the MFI business? I think the numbers there are also looking good. Quarter on quarter, sequential growth is very strong. I think 13% on that part of the book. What is the run rate you're expecting? And I believe there's some asset quality issues that cropped up in the MFI book in Q4. Can you guide for what you see ahead?
Yeah, the asset quality is, I think, the standard. We are, again, compared to any other of the peers, we are in the same bracket as asset quality because the customers are the same. Either it is for Belstar, that is our company, or anybody else, the customers are almost the same customers. If there is an asset quality problem there, it will be an asset quality problem. But there's no problem as such. There's also fluctuating. As far as the growth is concerned, they have actually done a very decent growth. I think they have grown about 50% plus in this last year. And they are also planning for an IPO. They have filed a DRHP also. So probably in the next 8 to 10 months, an IPO also should happen in that company.
Okay. Since it's anyway going to go for IPO, just to understand, I'm pressing on the asset quality point because in absolute numbers, not in terms of the percentage, but in absolute numbers, there was an increase. So is that just a one-quarter thing, or are you seeing something building up in the environment around you? Microfinance.
There is nothing to build up. This is just the money is given to maybe the lower rung people. And they are generally have been, whenever there is some pressure in the market, local pressures, etc., it happens. But I don't think there is something for concern there.
Okay, all right, Mr. Muthoot, we'll leave it there, sir. Great to speak with you. Thank you very much for joining us, and appreciate it.
It is raining very heavily here, you know.
Thanks. Growing up, the 1st of June used to be that date when monsoons, rains used to hit Kerala. Then, of course, it all became...
This year it has hit on the dot.
On the dot. So we are hoping that rains will sort of, come to Bombay very soon.
In the next 15 days, we can expect it there.
Yes, sir. We are waiting. We hope you enjoy the rains and everybody keeps safe. Absolutely. And thank you very much for the conversation today.
Thank you very much. We'll take a quick commercial break here. We're up, 590 points, 23,120 is where we are at as far as the Nifty is concerned. So there is a cool-off. 200-point cool-off from the day's highest point. But mind you, this waxing and waning will happen through the course of the day because these are still exit polls, and there is the event to the actual numbers, and finally, that's only tomorrow. So by this time, we'll be starting to get a fair sense of where the numbers are moving, and by 10:30, 11 o'clock tomorrow, like we've seen in 2019 and 2014 as well, perhaps we will know how the actual numbers really are. So. Understandable, but 600 points still holding as far as the Nifty is concerned. Time for a quick commercial break here. Atul Suri of Marathon Trends will be with us on the other side. Stay tuned.
Welcome back. We're still looking at a near 600-point pop on the indices. So, yeah, whatever little cool off is probably too harsh a word for this. It's a very green-looking screen. How do you trade it? What do you do at these elevated levels? Well, let's ask a veteran. Atul Suri is our next guest on the show, CEO, Marathon Trends. Atul, great to have you on. Good morning. Big morning. The question is, how do you deal with this? So, we've got the 600-point pop. Tomorrow is the final exam, as we've been saying. What do you make of the markets at these elevated levels? And the question is, what's the advice? What do you do? You can't sit out of it, but how do you get in it?
Yeah, so the key thing is that obviously it's been a gap up, and you are going to have a lot of activity, especially this morning and maybe tomorrow morning, because a lot of positions, people are positioned. There are some hedge shorts, there are some people who are naked short. And one must remember that we went into this event with no great euphoria. At an index level, we were 22,500. We were 22,200 even in Jan. So the interesting part is that the run up to this event, the market at the index level has been pretty flat. So that's a very, very big positive. Also, you'll notice that the market had been a pretty wobbly a few days before. So I think there are some shorts also in the system, and that's what the data shows. So this morning activity that you see, you'll see a pull up and then a cool off is all going to be a function of more of these kind of players. The more important thing that comes up or what concerns me is, as an investor, if people are sitting on cash or people are waiting to deploy, how do you do it? I think that index per se, yes, it's always a good strategy with the broader market, but there are always pockets of the markets where there are trends. And being a trend investor, our job is ultimately to identify and navigate client portfolios there. So what I am looking at for my investors is that I feel the next big thing is going to be this whole 125-day agenda. Interestingly, Modi's increased it from 100-day of the new government to 125 days. And I feel that there are certain themes or sectors which when I go through it, or I get a sense that they will be where the action will be. And then activity will be based in those sectors or those themes where there is going to be some political push or the government push. So I feel that the areas that will really stand out is that I think there's going to be a lot on the electric vehicle side. Of course, Tesla is going to be a poster child, and the question is going to be, will they come now or later? But irrespective of that, I think electric vehicles will be a very big theme. There'll be a lot of push out there. Green energy, another area that I think is going to see a lot of government policy initiatives in the next 125 days. I think there's going to be a lot of clarification on the e-commerce side, especially the taxation side. So I feel there is going to be a lot of government clarity or thrust in those areas. So these three sectors, I think, will be what you should look for. I think that there's going to be a lot of focus on 10 new cities for manufacturing. So the whole industrial activity or the industrial stocks or the capital goods and engineering, I think will continue to sort of benefit from it. Another thing they've been talking about is digitization of land records. I think that this is going to be a game changer for the real estate sector. What demonetization did to financials, I think this digitization of land records will do to the real estate sector. Shipping and logistics, that's another area the government has been talking about. So these are the 5 key themes that I think will matter, because in this next 125-day agenda, I feel there will be a lot of policy push, policy initiatives, and then, you will have to go and pick stocks and sectors in that thing. Broader market being what it is, I guess it just is an overall sentiment play. But I would actually focus on these themes and trends, which I think is what will reward the market or investors going ahead. That's where I would really go and deploy money now.
Okay. Atul, hi. Good morning. Prashant here. Good to see you. Can you identify a name or two each from each of these spaces?
No, can't, Prashant. Sorry. Regulatory issues, the nearest I can get to is talk about the themes or the sectors. But
Okay.
it's I can't really recommend stocks for regulatory
Okay.
reasons. I run a fund, so
Okay.
it's
So,
it's
so,
it's
so
not
the
it's
way
not.
you're, no, fair enough. So the way you're approaching this is not so much in terms of letting the price action lead you, right?
Yeah.
But sort of having a slightly broader thematic kind of approach in terms of what are the big spots where one should look for action, and
True,
this
very true.
action will
Very
emerge.
true.
Is that the way?
Yeah, I think so. See, one is an index play. You can come up and whatever, 2-3% up. Maybe something happens tomorrow also. We don't know what it will be. That's fine. That's the next 5% you take away. But the key thing is that where is the next 10, 15, 20, 30%, And from that point of view, as I said, that it will be important to play those themes, play those things. And the government or Modi has been very, very clear that his first 100 days, 125 days now is going to be a major thrust area where he says he's going to lay the blueprint not just for the next 5 years, but the next 25 years or whatever centuries to come. So I do think that there's going to be a lot of policy initiative that is going to come there. And that policy initiative is where you want to be because that is giving you the direction for hopefully for the next 4 to 5 years. As far as this government, if it comes in and if the majority works out, that's as exit polls are. So I would really play for this on not just morning pop or tomorrow's pop or what is going to do this week, but I think I would really play this market for the next 3 to 5 years. And in these 3 to 5 years, this is something I saw between 2003 to 2008 also. That when you have an industrials based activity, industrial rally, what happens is these sectors and themes perform for the next 4 to 5 years. Very often the narrative is, oh, they've run up too much, they've become expensive. But you really see and go back in history and time and see that a lot of stocks in that phase had far, far outperformed the market. So as a portfolio manager or as an investor, my aim is to look at themes. And the themes that I laid out to you, whether it's electric vehicles, e-commerce, the land records thing, cities, new cities, shipping, logistics, I feel some action is going to happen even in the PSU banks. A lot of deals have been stuck up, waiting approval. So I think that these themes will be areas to focus on. The broader market, yes, it's an index, it's a larger trend, but ultimately our aim is to outperform. And we feel these pockets will give us opportunities going ahead. And all this, as I said, is the backdrop of a global market, which I think is also on a very good wicket. I think that the whole global equity bull market, as I said, we've kind of forgotten for the last few months because of local narrative. You realize that even there's a lot of activity. So we are in a good equity, positive, buoyant atmosphere. One is to just go out and seize the index, or second is to look for trends. And I feel that there are some very strong trends emerging right now.
Okay, Atul, I'm just recapping for the benefit of our viewers your 5 themes in case anyone's missed it. It's EV, green energy, e-commerce, cap goods and engineering, and real estate because of the digitization of land records that Atul is speaking about in terms of the government's policy thrust. Now, Atul, while you give us, by the way, hi, good to be talking, of course. While you give us these specific themes, if I read between the lines, is there an indication that maybe beyond today and tomorrow's pop, you're expecting the index to remain flat? What's the index view?
I'm not saying the index will remain flat. These are very important sectors. They itself can drive the index. But what I am trying to say is that beyond the index, the opportunities are very good in certain themes and sectors. And as an investor, the question is that, okay, I have money to deploy today. Where would I deploy? The answer is clear that I would deploy in these 4 or 5 themes. That's what I'm trying to say.
Okay. Atul, just to go away from what to buy for a bit on the other debate in the market, right? The whole debate on liquidity, which is anyway hard to guess or second guess. Now, this whole FPI business about FPI money coming in, shorts getting covered, the technical aspects of this move, what do you expect over the next couple of days?
See, I think it will show out in the next 2 or 3 days. Initially, what happens is that the trading shorts, which are even domestic, a lot of guys have made hedges or some people would have been short. The morning will actually bring them into cover, right? And that is something that you're going to see initially, or maybe that's what you're seeing right now. The important things that we've got to see is that what is the flows that come, and that we will only come to know at the end of today and tomorrow. That one is the short covering, but is it followed up with portfolio buying? Because if you get portfolio buying as a follow-up, then this market can run up much, much more from where it is. However, if there is no portfolio investment, like, you have a large FIS sell figure, not that I'm saying it's going to happen. I'm just giving you, scenarios that are playing out, then I guess, things may cool off on the broader market. So the thing is that step one is all about short covering and all the trading positions which get so-called recalibrated. And then number two, which I think is a larger trend, is that is fresh flows coming in, and where they are coming in is more important. So as I said, for 1 or 2 days, you may see a lot of adjustments happening in portfolio positionings. But I think beyond that, you will see larger trends playing out. And that's where I feel that the 4 or 5 themes that I mentioned is where I feel that money will flow. And that's where I feel that opportunities will happen. On days like this, when you have such large index moves, everything does well, something little, something more. But it's not going to be always. Beyond that, it will be few themes, few sectors, few trends that will create the wealth. And that's where we would like to be.
No, you're absolutely right. And you got to be in the right spaces, right? And you get that right, and then it becomes a lot easier because,
70% of your work, Prashant, gets done.
Is done.
70% of your work gets done. It's like defense, right? I mean, whether you put A, B, C, X, Y, Z, there are 6 or 7 stocks. Even if you pick the worst, it was a good year for you. So the fact is that if you get the themes, the trends right, I think 70% of the work gets done.
Yeah, no, absolutely. And it's been that kind of a market as well, where these kind of things are, I mean, this is working. I mean, there are sort of, there's policy support, there's that kind of tailwind and focus is
Trends are your
work.
friends
Absolutely.
till the end when they bend.
I remember this one from our chat in Market Cafe. That was the famous last words in that particular conversation. The trend is your friend until the end, until it bends. Prashant.
Yeah, no, I mean, I think we'll hold off the sort of latter part for later, right? So,
yes, fingers crossed.
No, fingers crossed. Absolutely. We'll leave it there. Atul, a great conversation today. Thank you very much for joining us, and hope we can sort of have you back on once we have the actual results tomorrow, right? Because then we can talk with more certainty that the numbers are in the bank.
Out for sure.
Absolutely. Absolutely. All right, we'll chat again. Thank you very much. That's Atul Suri, Marathon Trends with perspective. 23,200 around is where the market is at, and the Nifty is, which means the Nifty is up about 650 odd points or so right now. There is, of course, we've been getting you a whole lot of opinion through the course of the day. You heard from Samir, Madhu, Atul, and others, but we also spoke with other veterans, Ramdev Agarwal and Prashant Khemka, for instance. And this is, of course, their reading of what the exit polls mean for the market. I mean, not just today and tomorrow, but over the next many weeks as well. Listen in.
So he has set a goal of 400, up ki bar 400 par. So if by chance actually this happens, all the short sellers, and I think the mood of the nation, and this is one election which is being watched all over the world. It's not only about what we are going to do. So this is a proper global event right now, and these things will sink very slowly. And we should not forget other things are also happening, in the sense that your GDP numbers just came day before or something like that, which is way beyond, almost 100 basis point higher than what the economists were saying. So a lot of things are coming together to say that this party which is starting with declaration of result is not going to be over just in a day or two. There could be correction, there could be selling by FIs, whatever. But I think it's a much longer party and larger party. I mean, larger for longer kind of party it is. What are the steps the government is going to do to revive the demand, which is not so widespread right now in the economy? Corporate earnings are there, but it's slowing down. I mean, this quarter itself has come to about 10% or so. So there has to be, finally, because on the multiple side, we are pretty high, almost highest in the world, or maybe second highest in the world after Japan. So we are quite expensive right now, and with the 5-10% move which we are seeing going forward, will make it even more expensive. So we are at 140% to GDP in terms of just the broad number. So what needs to happen is that there has to be a corporate profit boom, and it is anybody's call whether that thing will happen or not. I mean, and what the government can do in terms of fiscal policy and monetary policy, those things will be watched after initially 4 years.
Results are very much as the market would have hoped for. And there was some apprehension over the last few days, and hence last week the market was down 2%. So my expectation is that we'll see major buying very large magnitude of buying from FIIs in the coming days. I've seen a lot of them. Obviously, the interest level has been rising over the last 2-3 years. Many have invested, many have moved from China to India. But yet there's a very large number who, over the last few months, wanted to wait for the outcome of the elections to be out of the way. And those would start now actioning their analysis. So they've been in the analysis mode. And they've done their analysis and they've waited for this event. And now we should see them put their money to work. Going forward, next 5 years, when we look at if the economic growth continues to be in high single digit in real terms, call it 6 to 8%, and nominal GDP is in low double digits, profit cycle is on the up move, you should have base case low double digit, call it 11-12% kind of earnings growth. And if the profit cycle gains further momentum, we can approach mid-teens, in which case earnings can double over the next 5 years. And markets, if it remains where it is in terms of multiples, which while higher than most of the world, it is not unusual, it is not uncharacteristic of what India has been historically. And so we can see a market again, approaching a double over the next 5 years.
All right. Lots of market voices, market veterans there talking about what this sort of a win could perhaps mean for the market. We do need to take a very quick break on that note. We'll come back on the other side and continue getting you a lot more, including, of course, non-stop coverage of how the markets are dealing with the exit poll impact. Welcome back. Just updating that, there's no significant dip or anything or a cool off or sell off, because whatever little dip you got, about a 50-pointer on the Nifty, it's quickly getting bought. We're practically close to the highs of the morning with the same set of stocks. Look at Power Grid, 10% of surge on Power Grid right now. The Adani Group up between 8, 9, 10%, depending on which stocks you're looking at. And obviously PSU is absolutely firing away. So the short point is nothing has changed from the time we opened up at 9:15. So there's a little over 45 minutes of trade and it's still the same stocks going at the same strength. Let's now talk about a lot of the brokerage notes that came in after those exit poll predictions. And they were talking about, of course, what this may mean for the market. Hormaz has been going over all of those notes. Hormaz, how's it looking?
It looks pretty positive from what the brokerages are projecting as far as the exit polls are concerned. And I'll start off with what Nomura said. And Nomura believes that the exit polls are predicting a continuity of the current government in power as well. And what they also said is that 2014 and 2019, the average polls in both these elections had underestimated the seats won by the NDA by 50. And if that trend continues, they are expecting the results tomorrow to be even better for the NDA than what the exit polls are predicting. Now, they are expecting that in case the NDA is able to form a stable government, the FIIs who have been large-scale sellers throughout the month of May, that flows will return to the Indian markets and those flows will improve. And on the sectors, they expect domestic linked sectors to infrastructure, manufacturing, capex, and those kind of sectors are expected to outperform in the near term. When it comes to CLSA, they are expecting the new government to lay a lot of emphasis on macro-financial stability, battle rural stress, and also to push their medium-term goal of manufacturing building global manufacturing hubs is what the new government is likely to target according to CLSA. Now, what Jefferies is saying that the numbers in the exit polls are higher than what they were anticipating. It will be a sentimental positive for capex stocks if these results mirror what the exit polls have suggested. And what they also say is that the post-election rally, after the rally that the small and the mid-cap stocks have seen, they might take a breather in the near term. And FIIs, if they manage to step in once the stable government is formed, that might favor the large caps which are trading at a significant discount. Stocks like private banks, Reliance Industries, those kind of stocks are likely to benefit. And lastly, IIFL Securities are saying that if this government is re-elected, it will see an attempt towards accelerated reforms, and electricity and agriculture are likely to be the sectors that are in focus. Among the sectors, IIFL Securities is positive on infra, cement and private banks, along with NBFCs and select industries industrials, but they are negative on IT and specialty chemicals. So overall, a very positive outlook that the brokerages are projecting, and the usual suspects, the sectors that are positive for them as well. Back to you.
Hormuz, thanks very much for that. Look at the move in State Bank of India. I mean, that is the one which really is up at the day's highest point. It's a full 7% rally on SBI. Too much focus on private banks and when they will start to come about. It's the PSUs as a theme, and SBI, of course, even in terms of financials, etc., has been doing exceedingly well. So big move coming through there. Then, of course, it's the Adani pack. Ports is up 10%, and Enterprises is up 8%, Power is up 15%. And I'm going down the list, but because these three have got the largest amount of volumes, sort of along with the price gain, and HAL 6%. As you go down, it's a lot of PSUs, as we've been highlighting since the morning. IRFC is up 7, BEL is up 7, NHPC, REC, PFC, both up 10% each now. REC and PFC. Power Grid, of course, Surabhi just mentioned with a 10% pop. Actually, in PSU banks, I was mentioning SBI, BOB is another one, which has got an 8% pop as well. GAIL is up 8% right now, 221. NTPC is up 7%. So it is absolutely a PSU market with the maximum gains, as we told you at 8 in the morning. I mean, focus on what has done well, at least in terms of to play the election move. I think they should come right up on top, and so far that is kind of playing out as well. Maybe just since we've not looked at losers, I don't think there's anything really of note at this point. Overwhelmingly, advance decline. I mean, advances outnumber decline some 5:1. So that's the extent of the move. Nord Sula is down about 2%. There's something like DOMS, which is down 2%. Safari is seeing a little bit of pullback, 2-3% odd lower. But really, I mean, it's 1 or 2 here and there. That's about it, literally. Otherwise, it's a broad up move, which is very much intact. So 23,178 with about 650 points on it. Well, it's time for a quick commercial break here, but it's a special segment. It's the economy. My colleague Lata will get chatting with Sonal Verma of Nomura Financial Advisory and Pranjul Bhandari of HSBC. They put the focus on the stellar GDP numbers which we got on Friday as well. Stay tuned.